Hello everybody and welcome. My name is Tim, trader at the Camp Compound, a company of professional traders where we show you exactly how, where, when and why we invest. Let's get right to it. Today we are going to talk about the break of Bitcoin, some interesting news in the coming week, like the CPI, the inflation print, and we're going to talk about a couple of our positions. So let's get right to it because there is quite a lot to cover. First things first, here in front of us we have Bitcoin on the 1-day chart, and what we see here is that Bitcoin has tried to break through or has broken through the 28,800. This is the major resistance that we have been talking about over the past couple of days and probably weeks, because we have this big wall of resistance right here between 28,800 and around 30,000. And the secondary resistance here around 32,200. Now, what is the whole thing about this is that we also managed to break through 30,000. This is the major resistance, and the important thing is that we either have to hold 30,000 for at least 7 days. Otherwise, there's a good chance that we will still see a break lower, probably towards 25,200 and maybe 24,200. Could possibly go lower. The thing is that we are currently at the cusp of breaking the back of the bear. For this, we basically need a lot of momentum, and we don't really see that at the moment here over the basically from 20,000 all the way up to 28,000 or 29,000. We saw a big spike in volume, but now we see that there's actually very light volume happening, and we always have to be careful when there are big moves on light volume because they may be, as they're called, scam moves, because this could easily be overshadowed by a day like here on the 23rd or the 10th or the 9th of March, where the sellers came in and just put a stop to the market, basically. That is still very much possible. That is about, well, let's say 4 or 5 times the volume that we had today and yesterday. So imagine a similar move, but then to the downside. Still very much possible. Keep your eyes out. Do not let the herd of euphoria and FOMO get to you just yet. We're not out of the woods. Now, if we do manage to stay above 30,000 for 7 days, then there is a good chance that we have broken the bear market for the time being, and we will slowly start to transition back into the bull market. As unlikely as that may seem, it is still, that is kind of the case that we're looking at. Now, there's never a 100% probability, so don't bet the farm on it if we do manage to keep above for 7 days. All right? Good. Now, the fundamentals for Bitcoin have not yet changed. We still have this divergence. We still see that that is in play. We haven't broken that properly yet. We have broken the trend line, but we have not screamed above the 80 yet on the RSI. So, for that matter, it's not quite broken yet. As we said, we still have the low volume, which would show that the move is kind of tiring and at its end. But we did manage to break this topping tail right here, which is a good sign. It's just not enough to really bring it back to neutral. We still have bearish pressures on the market. So keep that in mind. It is very important not to lose your head right now. All right, then we will continue to Ethereum. And here we see that Ethereum is actually having some trouble. It is trying to make a new high, but it's making this double top here, having a secondary bearish divergence, and just altogether the altcoins are having some trouble at the moment. You would think that with Bitcoin breaking through, alts or Ethereum would move more towards the 2000, but that is not quite the case just yet. We may see this tomorrow, because the expectation is that the inflation tomorrow will be significantly lower. Don't be fooled. This is mainly because the calculus behind it has changed, obviously in the favor of the Federal Reserve, but on the other hand, there's kind of a lukewarm jobs data, which steers the or gives the Fed a bit more, the Federal Reserve a bit more room to either keep raising rates or to kind of keep it where it is right now. So the market is being very unclear. However, if we do indeed have a lower CPI of, let's say, 5%, current consensus is 5.2%, but if we have 5%, there is a good chance of the markets ripping back up for the moment. That is kind of the base case. If the Federal Reserve does slowly start to pivot or start to cut rates or start to pause, that will probably give the markets an incentive to rise first, but that is also the pivot point where the proper recession starts to kick in. And generally speaking, we still have a fall after that in the markets. So be warned, be careful. Things may start to look up a bit, but we are not out of the woods yet. Keep the idea of probability in your mind. There are no certainties, only probabilities, and now is definitely the time to keep that front and center so you don't step head first into your next mistake. All right, very important. Please keep that clear. Wonderful. Then my favorite coin, Radix, is also doing quite well. You see here that or not my favorite coin, but one that I like at the moment. You see here that the volume is going up quite well, but some topping tails, and this could be some trend ending volume right here because the candles are mainly showing wick and you can see some distribution, so there's a good chance that we move back towards 0.048 and then hopefully can consolidate there a little bit and move on towards that 6 cents approximately and try to break through towards 7 and maybe later back towards the 10. But we'll see. Otherwise, we will probably move back towards this range between the 4 cent and the 4.3 cent. That's kind of what we're looking at currently in Radix. Right. Then we have Ethereum, Bitcoin. As mentioned, Ethereum is having a rough time at it right now, while Bitcoin is aiming to move back up. That does mean that the pressure is back on Ethereum, Bitcoin, and we are currently breaking back to the downside, potentially bringing us towards, let's see, right between the 0.058 and the 0.054 that we're looking at for additional entries. We did poke above our average entry for a little bit, but now we will wait for more suitable entry points. That is that for now. Then we have the Ethereum short. No problem as of yet because of what we just spoke about. We have this bearish divergence. Both of them. This, of course, tapped the line that we have, the trend line. And then I hear my cat making some noise in the background, so I'm sorry. And then we have the secondary one right here. So that is definitely a clear sign that the market is having a bit of trouble at the moment. We could still see a move towards 2040 to 2000 approximately, depending on what happens tomorrow. From tomorrow onwards, there will be more liquidity into the market. This is generally a slow point in markets, whereas from tomorrow earnings season will start again and will kick off, and we have the CPI and the PPI coming out, so there's a lot to look forward to in the next week and the next month, which will probably kind of hustle up the market a bit more. All right, having said that, same thing for Bitcoin. We said that on this short we would add around 30,000. We did that at 30,170. Meaning that our average entry is up a bit, probably a bit more at 29,000, but I would have to double check. For now, I would say somewhere there. There we go. Not a problem at all. Target would be around 26,700 and probably more around 25,000 to 24,000. If we do stay above 30,000 for 7 days, this would be invalidated and we'll have to take the loss, but we'll see. Chances are that won't happen, but you never know with Bitcoin, because here you can see this is like as one of my favorite traders would say, the Chinese wall of resistances that we're trying to break in one go, and that is just somewhat unlikely. But Bitcoin has surprised us before, so we shall see. That is what I have for you today. Hopefully this was useful. Hopefully I have a bit of an idea of what to prepare for tomorrow as well as the rest of the week. And I will see you all again on Thursday. Bye bye. In the meantime, keep calm, keep cool, and keep compounding.